Hi, my name is Bob Kendall. You know me from the Kendall Report. I help you manage your portfolios and protect your wealth. The way that I do that is through our software platform, Portfolio Expert. This platform is amazing. It covers over 16,400 symbols. You can build as many portfolios as you want to manage and to protect your wealth. What you'll find by setting up a trial of our software is that we're going to train and walk you through every step to become what we refer to as an ETF hacker. We're going to show you how to take your favorite ETF and make it something really special and it's owned by you. We also call this building your own personal funds. And what that means is you're going to build your own personal mutual fund. It is all yours. You can pick the stocks and the software will walk you from A to Z, telling you when to buy and sell, how much to buy and sell, including helping you to protect your capital through the signals that when the market rolls over will get you to cash and out of harm's way. It's very simple from here. It's just sign up, click the link down below. We'll get you in our system. As soon as you get in there, we will notify you of a live webinar to walk you through every step so you understand exactly how to use this product and how to manage your portfolios and protect your wealth. Sign up now, just click the link below. Welcome everyone to the Kendall Report, where I share my 41 years of experience to help you manage your portfolios and protect your wealth. Remember to subscribe, like, and share these videos. I want to begin by thanking everyone that came to the live stream Wednesday. It was great hanging out with everybody. I also remind you that after the live stream, I do an abbreviated video tonight and a more extensive one for the end of the week. But there's a fair amount to talk about. We came in yesterday very weak, especially the NASDAQ. And then as the day went on and Chair Powell started talking, we saw the markets reverse. And I thought it was interesting, some of the things that came out of his conversation yesterday with everybody, and especially something that I thought was really revealing. And he was asked a couple questions specifically about the level of rates. And when he was asked by Steve Leisman at CNBC, it was very interesting for me because he read a prepared statement. He was ready for the question. And the question was, what type of rates are you willing to tolerate on the upside? Or is there any place where it will cause issues with the recovery? And Paul went down and looked at a piece of paper and read off a prepared remark. And he actually never answered the question specifically. And there was a couple other things that stood out for me as I watched that. And one was that he kept emphasizing that there was going to be a moderate uptick above their 2% target for inflation. And it was just a one-off situation. The inference there was everything's under control. He also mentioned something that I've been talking about, the pressures on the shipping channels and in moving merchandise throughout the economy and throughout the planet. And he seems to think this is temporary. And yet he talks about coming back to a 4.3% unemployment and other big metrics that would suggest that another 5, 6, 7 million people would be back to work and everything was going to move more back to where it was in 2019 at some level. My opinion is that these inflation pressures will not be temporary and they're going to be much stronger than they think they're going to be. So they're actually blowing them off. And if you look at the dot plots, which is where different members where they think we need to start to taper and other things like that, there's some that are actually talking about in 22 seeing that happen. I see the potential for that to happen even sooner. I spent a lot of time on the live stream yesterday actually discussing the potential for a spike in yields up to 2.5, maybe as high as the old highs at 3.2. And I think this is a real possibility. And it's not going to happen overnight, but as these pressures start to emerge, they're going to see more and more market participants start to believe that this is the case and start to price that into their models. And now, this does not necessarily have a negative connotation to the stock market, but it is something we're going to have to watch. At some stage it will be negative, but not for a while. The other thing that I recognized as he was answering questions, he wasn't willing to go beyond the written statement. He wasn't going to add anything new, which is not that unusual. It does suggest, at least to me, there's a lot of things that they don't have a clue what's going on and that they're just hoping they can control this. I showed in the live stream yesterday the yield curve that it increased on the 530s. This was a new high for this sequence in that, but that is something that I'm going to continue to watch, and I'll continue to report on over the next several weeks and months as I see developments there. In the end, we saw a big reversal on the upside. The NASDAQ turned positive. All the markets ended up positive. The S&P was up 0.3, the NASDAQ up 0.4, and the Russell up 0.7. So we really saw a big recovery because we were down, especially on the NASDAQ, pretty decent numbers. So this recovery was significant, and we're seeing a continuation of what I started talking about last night, was that we're seeing an increase in momentum starting to come out, where we're seeing trend mode come into the short-term charts. This is going to be an important narrative. We did render all-time new highs on the Dow Jones and the S&P yesterday. So this is going to be a continuing saga, and we're going to start to move closer to 4,000 on the S&P, and we'll see if we can get any serious acceleration. So let's go ahead and take a look at the chart, see how Thursday's setting up. As I reviewed the WaveTech database, we did see 583 new buy signals, 121 sell signals, so we have a positive ratio on overall. Most of the buys came in on the 1-2 model, which is the more aggressive of the two models. So we did see the overall symbol percent move up to 30.76, but we've been locked in this 30 to 31% range for a while. So in spite of that reversal yesterday, we didn't pick up a lot of new symbols here. Right now there's 5,048 symbols long out of the short-term database of 16,400. So there's not a lot of traction yet. And as I mentioned in last night's video, all this means is that the traction that we have is in a very narrow sense on a short-term level, and we're starting to see some momentum come back in the market, but it's still not getting a lot of traction in spite of printing all-time new highs. As I begin with the S&P review, I am rolling over to the June futures, so there is a discount between the March and the June. All of the volume has moved over to the June as of yesterday, so we're seeing a decent amount of volume so far overnight, 80,650. We are seeing a slight bid in the market pushing up to the 3960 level. So just remember some of the numbers that I talked about, and when we use the nearest futures contract, therefore, because of this discount, we still have not printed above that 3980 level. Yesterday, the high on the June futures was 3978. But as I mentioned in the opening comments, we are seeing some decent acceleration here. PPM1 is now at a plus 0.54, way over trend mode. We definitely have a strong trend emerging on the short-term basis. The key numbers for today, looking at the market grid, is going to be R1 3973 and then R2's 3984. So my expectation is an S1 R2 range for today, but we continue to climb in this wedge in the market grid pattern. We're getting very close to PPM2 turning up, but PPM3 is still not responding. That will take more time before it will start to turn up, and we're going to have to remain above that 10-period moving average, which is now at 3908 on the June contract. That will be moving up to around 3920 tomorrow and so forth, so that the support level on the 10-period moving average is going to move up very quickly underneath the current market prices. So there's going to be substantial support right between 3930 and 3940 for the moment. There is an acceleration going. Downside is still very limited. The key pivot on the downside would be a penetration of 3922, the STX number. Even then, if that were to occur, we would have the moving average just below it. So there's still going to be substantial support. I don't see us getting anywhere near that. Expectations are for S1, R2 for Thursday. As we look at the SPX, we did see a high of 3983.87, and that was an all-time new high on the cash. And this suggests that we're going to move toward some of the higher end levels. As we look at the market grid for today, you're going to see that R1 is 3983, R2 3994, and then R3 4005. So it looks like we're going to head toward that 4,000 number over the next couple of days. And just like with the futures, that 10-period moving average is going to be the critical level. Now, on the cash, it's 38.99. It is rising about 15 handles per day, so that's going to be 39.15, and then it'll be 39, around 39.28, 39.35 is going to be major resistance. As in the futures, looking for an S1 R2 number for today, so that would be 39.64, 39.94. Next market I'll review is the NASDAQ. We did see a very nice reversal yesterday. We traded down just about to S3. The low yesterday was 12,934. The S3 was 12,939. So we traded just below S3. R2 was 13,273, and we saw 13,271. So we had an S3 R2 range yesterday. As we look at overnight action, we're seeing a slight positive, up 850 on the evening right now. As we look at the market grid for today, we've penetrated through R1, so we're looking at R2, possibility of R3. So we're looking at 13,322 to 13,393 on the upside. And as I mentioned in yesterday's commentary, I believe this market is set up to go up and test some of the more critical resistance numbers and ultimately move toward an all-time high again. So we're looking at the range expected today, 13,125 is S1. We had a low of 13,165. I'm not sure we'll make a lower low from here, but it certainly is possible. We should see S1 R2, which would be 13,125 to 13,322 for today. The final market that I'll cover tonight is gold. Gold is seeing a nice overnight session. So far, we're at 17,048, up 1.24%, up 21 handles. So we're definitely seeing it move above that 21-period moving average. If you want to see a really in-depth analysis of gold, go to yesterday's live stream. We mark all of the timelines so you can see when I was talking about different markets throughout the session. I think it was 2 hours and 45 minutes. So we're now looking at heading toward that 40-period moving averages. We just take a quick look at the PPMs on a daily. You can see they're absolutely screaming. PPM 1 is now in trend mode to the upside, suggesting 1721 is rock solid support here. Just looking at the market grid for today, 1724 is S1, R2 1739, so we've been way above that. We're actually trading above the RXT number because the volatility has been very contracted over the last week or so. We've only had one big day during that period of time, and the last 3 sessions have been very narrow. So it's possible if we close today over 1748 that we would get a sideways movement for a couple days, but it does appear that we're going to some of the numbers I've been talking about, 1760, the possibility of going up to around 1780, 1778 is a number that I have on another analysis. But this is exactly where this market should continue to move higher, and ultimately, I believe we'll see an intermediate bottom form in this market, and we'll have much more upside going back toward 1830, 1880. This will complete the video for tonight. Thanks for watching. We'll talk to you tomorrow night. Hey folks, if you enjoyed this content, make sure you subscribe, hit that like button and the notification bell so you'll know when I do these videos.